Yo, what's going on, guys? Hope you all are doing well. It's your boy Mac. Welcome to YouTube Live. Welcome. Alright, so as you guys can see, we're currently still in this SPX trade. I do have a small position on. Really, I want to see what's going to take place on the daily time frame for this current day's candle. Now, I really don't care, right, if the volume that I do have on hits my stop loss. As you guys can see, right, my stop loss is above my invalidation zone. My entry was taken on the M1 time frame. Okay, cool. So my entry was actually taken on the M1 time frame here. Very straightforward entry. Stop loss is still here, and I have about 12% volume still running on this trade here. So let's see what happens. Like I said, I don't really care if it reverses or anything like that, but I do want to see what the daily time frame, how this daily candle is going to close here, right? And then, of course, you know, as more people join in and as you guys start to ask me questions, we'll get into, you know, what positions you guys can be looking for as it relates to Tuesday and Wednesday. Feel free to ask me questions, guys, if you all have any. Our last YouTube live was Friday. It was on Friday, and we had excellent questions. If you haven't checked out that YouTube live, feel free to go check it out, because a lot of gems were dropped simply because you know, the individuals watching the YouTube live, you know, were asking questions. So to the individuals watching now, do you guys trade the index market? Talk to me. And if not, what do you trade? What assets do you trade? All right, so let me know if you guys do have any questions. Until then, I guess we can just prepare our charts for New York session tomorrow. Yo, what's going on, man? How are you? We're just setting up our charts for New York session tomorrow. It is 11:29 p.m. So 11:30 p.m. my time, Eastern Standard Time. I live on the East Coast of the United States. What about you, man? What time is it where you're at? Talk to me. Nine a.m. Oh wow. Oh wow. Very interesting. So, what time do you usually trade the Indian index? Hey, and what's the Indian index name? I'm gonna pull it up and do an analysis for you. Yeah, I just don't know the name of it, of the Indian index. So, as we can see, market opened here, hit all of our projected targets that we talked about this past weekend. We closed here, this last M15 candle, right? We talked about why this was a projected target on our last YouTube live, and as you guys can see, price shorted, pushed to the downside, and hit our target. Right. So as it relates to the NASDAQ, as it relates to SPX, right? What am I looking for these next couple of days? So it's really tomorrow, okay, which will be, I'm saying it's tomorrow because it's 11:33 p.m. my time right now, as you guys can see, 23:33. UTC -4. All right, that's my time zone. So it's still going to be this current candle, okay? But for me, it's going to be tomorrow. All right, but it's still going to be this current candle. So tomorrow morning, all right, I am looking for this candle to stay bearish. All right, we would like a retracement or pullback on. Sorry about that, guys. Within the S&P 500 index, that would not be a bad thing at all for us to see here, right? So I would like to see price confirm this swing high by giving us a bearish candlestick closure on this daily candle here. All right, now if price continues bullish, that's completely fine. All right, no matter which way price continues, all right, what's going to end up happening is we're going to end up on the M15 time frame. All right, within this area right here, we're going to end up taking a buy or sell position, depending on depending on how price sets up and what forms, things like that, right? So tomorrow we're just going to take what we see. All right, if we see buy position set up, then fantastic, right? We're looking for buys. Now, what's going to be safe about taking buy positions is the fact that we still have this controlling swing low here, right? This is the controlling swing low of this entire bullish move. Last week, we were completely flawless within the market. Completely flawless, right? We took buys on Monday, Tuesday, Wednesday we called buys publicly. Thursday we took buys, and then Friday we took sells off of the daily high, which was the screenshot that you guys saw earlier on the YouTube live, right? So if you missed that, just feel free to rewind, and you're all good, right? So essentially what I'll be looking for, all right, is for this candle to possibly close bearish. Now, if tomorrow's candle, if this current candle here closes bearish on SPX 500, okay, or if we respect, all right, I would love for it to close bearish, but even if we close bullish, but we respect last week's high, okay, essentially what that means is, all right, on Tuesday, all right, my team and I will be looking for short positions, okay, right here. On Tuesday, we'll be looking for short positions. Now, we really have to wait for this candle to finish closing, right? So I have a webinar tomorrow with all of my students here at Mac Trading Academy. We have a little over 460 something students, I believe, last time I checked. And essentially what we'll be looking for, all right, on tomorrow's webinar is we'll be looking for how this candle closes. Now, our webinar takes place an hour after this current daily candle closes, all right? So it's excellent for us. Then we'll really be able to break this area down. But right now, all right, for tomorrow, I'm just going to take what I see, right? If I see buy position set up, I'll be taking buys. If I see sell position set up, then I'll be taking sells. And then Tuesday will be more of a confirmed day. So will Wednesday and Thursday as well, all right? Do I trade? Okay, so we're also live on TikTok right now. Someone says, do I trade the volatility index? No, I do not trade the volatility index, but it is something that you can utilize with my trading strategy. It is something you can trade. Bro, I trade after 10 a.m. The volatility ceases a little bit. Its name is Nifty. Okay, let's see. Nifty. Let's go to all. Okay. All right, so right now it's, what time is it there right now? 9:30 a.m.? Is that what time your market opens? What time? Tell me what time your market opens. It opens at 9:15. Okay, let me see. Um, Hold on, I'm doing a little quick research right now. Give me 1 second. So 9:15 a.m. to 3:30, and we probably, I mean, okay, so interesting. So right now it's pre-market. Seven minutes from now? Okay. Okay, 7 minutes from now. So that'll be here. Okay, interesting. All right, so let's go to the daily time frame. All right, and let's look at the Indian markets. Let's see what's been going on. Now it looks like we just came out of as relates to the Indian Nifty. All right, it looks like we just came out of a consolidation phase here. All right, so we're just gonna highlight that. All right, so we're also live on another platform. Someone says, "Hey Mac, where do you live? What country do you live?" I live in the United States. All right, so we just had some consolidation. It looks like we're breaking out to the upside. We did have a swing low here that was confirmed here. All right, you're clear to look for bullish continuations, my friend. Now, keep in mind those bullish continuations may not take place until Tuesday. All right, and the reason why I say that is because you have to wait on the current candle to finish forming, right? So, and we're coming out of the weekend, right? So do keep that in mind. But I'd be looking for bullish continuations. Now, keep in mind, I don't really trade the Indian markets all too much. 23:45. Yeah. So we have like 4 more minutes, something like that. 23:45, 23:45, 23:45. So it looks like, it looks like it's not that active, you know. So, well, I mean, it says it's a full day. Five hours and 15 minutes. A little over 5 hours and 15 minutes. Very interesting. Six hours. I mean, from what I'm seeing, let's just break some things down really quickly. So I would have probably looked for a short here. Target here for this day. This is Wednesday, so let's go back to the daily time frame. Wednesday was a bearish day, and we are also in consolidation, all right, or accumulation within this phase here, right? So we're free to take buys or sells on that day. We're gonna look at this reaction as well here. All right, so we'll look at this reaction and we'll look at this reaction. All right, to see if we would have taken buys here. If an entry forms, then we'll mark it up, and we'll also measure the target, and then we'll also mark this one up, measure the target on the last trading day before the. I mean, technically speaking, this is the last trading day, right? But we'll just start here, work our way up. All right. If you guys do have any questions, feel free to drop them. Feel free to interrupt me. It's completely fine. All right, so let's look at this area starting on the M5 first. Now, keep in mind, whenever I'm live trading, right, I always have multiple screens up at a time. And I'm usually the reason why I do that is because I have multiple time frames up at the same time. Okay, so it doesn't look like an entry formed here on our M5 time frame for the buy, and maybe the buy just didn't set up on that day, and that's completely fine because the sell ended up playing out anyways, hitting our target. Now, the M5 does give us an entry as it relates to the sell, the short position here, right? We can see a very, very beautiful, clear entry opportunity here. All right, so we would have probably covered our short here, right? So you would have probably, on this trade, more than likely you would have been tagged out, right? But let's continue to break this down to the M1 or the M2 and then the M1, and let's really see, you know, what's going on here. So what we're going to do is we're going to delete this for now. Okay, so let's see. Give me some time to study. So it looks like, yeah, even if we would have taken our entry on the M2, I would have still set my stop here. After getting stopped around this region here, it doesn't look like we have another entry opportunity form until this area here, which price never came back to before hitting target. So no entry on, or still stopped on the M2 as well, stopped out. Let's check M1 time frame. Beautiful. Short position would have been here. I do take entries. I do take entries on because of that volume imbalance. You guys see these two candles here, right? That is there are a couple of confluences that take place here, but that would have been the trigger for myself, right? So this would have been the trade. All right, minus 1% on the first position, plus 5.24% on the second, clearing the day at 4% return on investment. That's usually. I mean, these are decent numbers. All right, let's move into the next day. All right, let's go to the M15. BTC USDT weekly outlook. Yeah, we can definitely check that out for sure. Right now I'm going over the Indian index market, applying my strategy, going over the Indian index market for my boy Yash. If you guys missed our one-on-one session, feel free to check out the last YouTube live. He has some great questions, and we were able to do like a little YouTube one-on-one session. All right, so that was Wednesday. Now let's move into Thursday, right? So we'd be looking for Thursday to close bullish. All right, for reasons that we talked about on the last YouTube live, right? So we'd be looking for. So this day closed bearish. So this was the Wednesday candle closure that we saw. Thursday starts here, right? And we would be expecting this candle to close bullish. All right, so Indian markets just opened, by the way. So Yash said he trades after 10 a.m. Eastern Standard Time, or 10 o'clock a.m. his time. All right, that's when he said he starts trading. So on this day here, we'd be looking for that buy position. Let's just set this up as well. Well, let's not skip this day. We don't have to skip it. All right, so on this day here, we have a nice bullish push to the upside. We have imbalance here, all right, volume imbalance. The market usually does not like volume imbalance, right? So seeing as though we opened and ran away from this area, all right, I'd be looking to short this day, all right? Push price back down into that imbalance. Most of my trading also has a common sense factor to it, all right? But I mean, also, to me, I'm saying it's common sense, but it's also probably because the amount of hours that I've spent within the market. So you start to recognize these patterns and things like that. All right, so here we can see. All right, so price went bullish, pushed to the upside. Right, we'd be looking for some type of short position. All right, we'd be looking to get in. Most of the time, I am watching the market for about 5 hours and 30 minutes to answer that question. Right, so we'd be looking to get in here, and then we'd be looking to target. Well, first we'll measure the manipulated range first. We'd be looking to target something down here within this area. All right, so let's first start on the M5. Now it looks like this asset gives pretty decent M5 entries from what I've seen so far. All right, so we would have taken, so my team and I, based on our strategy, right, we would have taken a short here, and we would have simply just covered the high. All right, let's go ahead and look for our target. Yeah, so I mean, like this right here, 1.5 standard deviations of that range, like we would have been comfortable with exiting the trade there. 2.38 return on investment, very straightforward. It's consistent. You're in and out. You're in this trade for how long? An hour and 35 minutes. Price, hits your target. You're up 2.38%. You're funded $100,000. I mean, that's $2,380. Like, that's a good day right there, right? So that would have been my personal target. However, my runner, I would have left to target this volume imbalance here for about 7.81%. So that would have been another day applying the strategy and it playing out very, very well. I'm going to see if my broker allows me to trade these markets. This seems very, very straightforward. I'm going to be honest with you. All right, let's get into Friday here. All right, so Friday we'd definitely be looking for this candle to close bullish because Thursday gave us the confirmation. Let me show you. Let's go back to the daily time frame. Right, so this was Wednesday, this was Thursday. Friday gave the Thursday gave the confirmation. So Friday we're looking to go bullish. We're looking to buy on Friday, right? So we're looking for high probability buy positions. Okay, so now I'm just looking to see where my strategy would have played out. Looking for my M15 confluence. 15 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 All right, so if we're treating this asset a little like US 30, let's see how price reacted here. Phenomenal. Phenomenal. So our entry would have been here. Oops, wrong one. Our entry long would have been here. Stop loss would have covered this region. Target would have been so my target would have been there. 2.5 standard deviations of that range. I mean, that's easy. And the markets do this over and over and over again on a cycle. Bro, you said index are based on algorithms, so why FVGs works is basically every index market. Yes, but only when it's added with specific confluences can you increase that probability, because those are everywhere, bro. You know, those are like, if you look at any type of retracement range or continuation range, you're gonna see FVGs everywhere, right? Like, you're gonna see those everywhere. You have to add them with certain confluences in order for them to, you know, be valid. So we can see that, you know, Wednesday, maybe an iffy day, right? Maybe you took a loss here when price pushed to the upside here, right? You were able to still catch re-entries on the M1, right? So maybe you took a loss there, but it was still a positive day. Thursday, right? 4 something percent would have been my majority off the table, all right, based on my trade management. Extended target for the runner would have been this volume imbalance here. And then looking for buys on Friday on the Nifty, right? Very, very straightforward, 2.67%. Thursday is Nifty expiry. Oh, okay. Very interesting. Yeah, I don't know much about the Indian markets. Let's get back into a little bit of let's get into a little bit of the S&P. Yeah, I don't know too much about the Nifty markets, but that was a fun little breakdown, fun little backtesting session applying the strat for you guys. Yeah, so as you guys can see, the targets that we went over on Friday, the YouTube live from Friday, the targets that we went over, right? Those targets were hit today. I am completely out of this position now. Runners ran, right? 13.99 R on S&P 500. Not a bad trade at all. Like I said, we don't usually do things like this, right? We're usually in and out of the markets, right? But every now and then we do like to hold runners every now and then, for sure. I'm just gonna delete this from the weekend. Yeah, we had an excellent live this past weekend, or this past Friday. Thanks for analysis. Yeah, man, absolutely. Thanks for the analysis on Nifty. Absolutely. All right, so someone's asking for a Bitcoin weekly outlook. We can definitely check out Bitcoin. Let's clear my Bitcoin chart. All right, so for the past couple of weeks, I mean, based on the weekly time frame for the past couple of weeks, we've pretty much just been accumulating here. All right. So as it relates to a weekly time frame, here, let's see. As it relates to a weekly time frame, I mean, there's not really much to speculate on right now, right? We technically are bullish. However, price, has not given us a candlestick body closure above this previous weekly's, above this previous high here, right? We do have a controlling low here, okay? But based on, this weekly candle, this weekly candle, this weekly candle, so 1, 2, 3, based on the last 3 weeks, price has not been able to close bullish above this price level here. We've been able to spike above it, right? But we haven't had a bullish candlestick body closure. So even though this is a controlling, swing low for the time being, right? It is weak. Okay. So essentially what price is doing right now is it's accumulating. All right. What are the options that, for us if price is accumulating? The options, here, let's see. Can we lock it? Yeah. Go a little like this. So we can look for buys, or we're going to look for sells, right? Oops, there we go. That's the only thing that I'd be looking at right now as it relates to Bitcoin. If you're looking at the weekly time frame, you would have to wait for this breakout. Now, if you're not just looking on the weekly time frame, right? If you're also on the daily time frame, so on and so forth. All right, really at this point, I would also still wait on the sidelines, right? And what would I be waiting on? I would be personally waiting on I would love to include that wick. All right, we're gonna do something like that. We're gonna do something like that. All right. Also, what I would be waiting on, all right, as it relates to the daily time frame, is for price to give you an actual direction. Right now, once again on the daily, you can see the accumulation. All right, we're just accumulating. We haven't quite distributed yet. Now, price has two options. Like I said, we can distribute to the upside or the downside. We're going to distribute one way or another. Right now, it's just all about, are you going to be able to catch it? Okay, so I would go ahead and set alerts here. I would just set alerts at the consolidation high and the consolidation low, right? And that's it. That's really all you have to do in this case. Something like this, boom, and you're done, right? And as price is accumulating, I wouldn't even touch it. Once it distributes, okay, then you can feel free to engage. Now, as it relates to the lower time frames, okay, I get asked a lot of questions about, do I day trade crypto? So let's go over Friday's crypto movement, okay, within the markets, and let's break down and show why I do not day trade cryptocurrency. Is it something that you can do? Yes, it is something that you can do. Absolutely. If you want to day trade crypto, it is definitely something you can do. It's just not something I personally do. All right, so all right, well, in this case, I mean, on this day, I guess it worked out, this random day. Doesn't look like you got anything within the AM session. Almost, though. This would have been a great trade to catch, but Confluence didn't set up. Can you just take this strategy and run with it? Absolutely. Strategy that I use in order to trade the index markets, very, very straightforward. Yes, you can take it and run with it. It is not difficult at all to implement. I'm leaning towards a bearish week. Thanks for the other scenario. Yeah, as it relates to the actual week, I mean, crypto is it's not just a technical game when it comes to crypto, right? Like, it's highly speculative, which means that you really have to be in tune with those fundamentals, man, right? So all of the news around Bitcoin, spot ETFs that's being applied for, right? You got to keep up with stuff like that. Even as it relates to other countries applying for those ETFs, right? Former SEC chairman says spot ETF Bitcoin should be approved, right? You have to know stuff like that. You have to be doing homework like that. You got to understand that the SEC acknowledges BlackRock's spot Bitcoin ETF application, right? The SEC also acknowledges Fidelity's, VanEck, Wisdom Trees, Invesco, and a few more like big names, right? The SEC acknowledges their spot Bitcoin ETF applications as well. Okay, it even goes as far as Australia. Australia Security Exchange receives its first spot Bitcoin ETF application, right? So, when it comes to Bitcoin and when it comes to cryptocurrency, you have to be in tune with the fundamentals. Everything that I just named off, I don't even trade cryptocurrency, right? I invest into it long term, but I do not sit here and day trade these assets. And I still keep up with the fundamentals because I have long-term portfolios. So if you're going to be predicting bearish weeks or bullish days or whatever, you got to stay up with those you have to stay up to date with those fundamentals, right? Those fundamentals is really what's going to drive this speculative market. Bitcoin is so new. It is right now strictly speculative. It does not have that much utility to be anything but speculative, right? We don't use it for everyday transactions, right? We don't use the Bitcoin blockchain, as efficiently as we could, right? And because of that, it's pretty much speculative. It doesn't have that much utility just yet, right? Now, all of these companies that are applying for ETFs, is that going to increase the utility? Absolutely, it's going to increase the utility. Absolutely, for sure, right? And then is that something that we can take advantage of? Yes, we can. Yeah, I'm kind of like a contradiction. I'm leaning towards a bearish week. Thanks for the other scenario. When sentiments go bullish, I'm going bearish short term. Yeah, man, that's not a bad way to go about it. Honestly, that's not a bad way to go about it because price usually has to sweep liquidity anyway before it runs, right? So if we're looking at Bitcoin, right? If we're going to go bullish, right? If we're going to go bullish, price would need to do something like this. It would need to sweep liquidity. So the way you're going about it, the way you're thinking about it is different from a retail trader, and that's not bad at all. To be honest, I like it. So if we're on that weekly time frame, like this high and low range here, right? We can easily, just really it's really all about just tapping into those fundamentals when it comes to cryptocurrency, right? Like I've been investing into XRP since it was at 17 cents back in 2019, right? It's now floating at like 70 something cents. Crazy bananas, right? Absolutely wild. I mean, we were sitting pretty at 47 cents here, right? Before they had to pause the market, right? And the reason why they had to pause the market was because of, here, let's actually, we have to pull up a new XRP chart anyway. I think they're going to put it back on Bitcoin as well. They haven't put it back on Coinbase just yet, have they? They have. They have. Very, very solid. So they've put it back on Coinbase. Now you can buy XRP at 70 cents. However, my team and I, we got the discount at 17 cents down here within this area. Very straightforward. Let's go ahead and add XRP back to the list here. I don't know why this is called Forex. I just never changed the actual list name, but let's actually rename it. Day trade. I like it. So back in 2019, price was crazy low for XRP. Yeah, 2019, we were able to get in at like 22 cents. Within this area here, 17 cents. Down here within this area in December. I mean, it was a great year, right? Then price dropped all the way down here. And now we are, we're headed back to the upside. XRP could overtake Bitcoin's market cap. Yeah, absolutely. Yeah, for sure. And XRP has much more utility than Bitcoin. Way more utility than Bitcoin. So I'm actually, I'm expecting XRP to outperform Bitcoin, right? Percentage wise. No one cares about the actual price, but percentage wise, I'm expecting. Actually, it's just something that we kind of know. It's not even. I mean. Yeah, it's just something that you know. The utility behind XRP is crazy. But we've been focused on that project since 2019. So yeah, maybe we'll go live tomorrow night, talk about the trades that I take during New York session on Monday's candle. Do I get excited to trade? Yeah, absolutely. 9 hours, 30 minutes. Yeah, every morning I wake up to trade. I'm actually like looking forward to hopping on the charts, getting into the markets. It's kind of crazy. I mean, especially, but when you have, when your strategy, when the strategy that you apply allows you to, be consistent, you kind of start to enjoy trading, right? Like, we didn't take a loss at all last week. The week before that was also very, very good. We had crazy trades on US 30 last week. Or excuse me, not last week, 2 weeks ago. Last week as well, though. Last week we caught an entire H4 leg on US 30. It was a day trade that ended up turning into an intraday trade. So let me show you guys. So last week on US 30, we took a buy position down here. And like right here on this wick. Right here around this wick low, this is actually where we took the buy position. And our target was 34,476.52, right? So we were able to catch that entire move to the upside. It was crazy. Let's actually go to the M15 time frame. Let me show you guys where that entry was. because that was bananas. So this was the entry here. Let's set that target 34,000. Anyways, is this on the M15? Let's make sure this is placed on, or excuse me, the H1. There we go. So this was our entry here. All right, you'll see the H1 wick in just a second, but very, very straightforward entry. It was a day trading trade. All right, so it started on the day trading time frame of the M15. Had the daily time frame in Confluence though. All right, we were expecting Tuesday's candle to close bullish, which is exactly what happened, as you guys can see. All right, if we go to the H1 really quickly. All right, so if we go to the H1, all right, you can pretty much see this was the wick that we entered on, and our target was this region here, right? So we were able to catch this entire move here, this entire continuation. We also took buys on Monday. All right, as you guys can see, it's already marked up and everything. So we did take buys on Monday. We just didn't hold our buys from Monday. We took profit within this area here from Monday, which it's all good. I mean, it's consistent. My goal in trading is capital preservation and consistency. What is the strategy, bro? Breakout, trend following, if you don't mind me asking. Yeah, my strategy consists of two main important concepts, right? Liquidity and time. Okay. Now, in order to understand how I truly utilize these two concepts, all right, what you first have to understand is the market is moved by an algorithm. All index markets are, okay? It's not moved by buyers and sellers, okay? That is first and foremost, all right? The trader who mentored me, okay, traded for an institution for over 25 years, okay? They have algorithms that move the market. And the algorithm's job is to suck in retail money so institutions can place their buy and sell orders. All right, now does that make sense? Let me know if that makes sense before I move on. We have 2 viewers watching this stream right now. Let me know if this makes sense. Okay, perfect. So someone says, oh, that's new to me. And someone says, yes, perfect. C, my brother. So yeah, man. It's I mean, it's not a new concept. Algorithms have been around for quite some time, but a lot of people don't know about the algorithm itself, right? It's proprietary. Governments have access to it, and institutions that are managed and regulated by the SEC have access to it as well, as some European unions have access to it, right? Look it up. It's called. I mean, I really don't talk about it too much, but just look up that acronym right there. All right, I'm not even gonna go into it really, but yeah. All right. If you do want to know more about that, it will be in my second index course. All right. So you can feel free to stay tuned for that. So yeah, these are my 2 main confluences. All right, liquidity and time. Now, why is liquidity important? Liquidity is important because the algorithm itself cannot fulfill orders and move the market without taking liquidity. And what is liquidity? Liquidity is just money resting in the market in the form of, as you probably guessed already, retail stop losses. Okay? Now, along with the algorithm, okay, institutions also have access to brokers' feeds. Okay, do we know what broker feeds are? All right, just to keep it in layman's terms, do you guys know what broker feeds are? Exactly. Okay, so he says, interesting. Is that the reason why all markets move in unison? Almost most, especially in crypto. Exactly. They all move pretty much at the same time. They make large moves at the same time. You know, like you can't tell me that there are the same amount of buyers in US 30 as SPX and NASDAQ. There's just no way. There's just no way. Right? So for people who say the market is moved by supply and demand, that already proves inaccurate. Now, can you use supply and demand to develop a strategy to successfully invest into the market? Yes, you can, because it's just a pattern and you're trading patterns within the market. Why are trading patterns within the market the best thing to do, or one of the best ways to trade? Simply because the algorithm that moves the market creates certain patterns over and over and over again. That's why our strategy is so successful. Right? Here are some moves that you guys can see from a few weeks ago. This was a crazy week for us. Now, all of this wasn't 100% volume. All of these were day trades that I just held runners on. Right? And whenever I hold runners, it's only like 10 to 15% of my overall position sizing. Right? So all of this combined equated to about 20% return on investment. Okay? But I mean, that's still crazy. It's still 20%. Right? And then sometimes you have runners that don't work out. So this was a day trade that hit target, okay, and then we left 10% on, and it stopped us out at break even, right? Which happens sometimes. But most of these positions I'm in and out very, very quickly, like within a few hours, really, within the same day, in and out. 2 to 5% return on investment. On the high end, 8 to 12% return on investment. You're just in and out. Variations depend on fundamentals. Yeah, for sure. Eye opener, subscribe, bro. Hey man, I appreciate it. Shout out to you. Ballot Pinoy. Hope I'm pronouncing that properly. Shout out to you, my friend. Are there any specific questions that you have? Last time we were on YouTube Live, we had a one-on-one session with my good friend Yash. All right, Bally, if you have any specific questions at all, feel free to ask, and we can have like a one-on-one session on this YouTube Live. And I appreciate the subscription. Much love, bro. So yeah, I'll just continue to talk until questions are dropped. If any of the viewers do have any. So liquidity and time. So that's essentially, to answer that question, what my strategy pretty much revolves around, right? Liquidity is the gas within the market. And then timing just keeps everything unison and in profile, right? I'm looking for a specific market profile during a specific time every single day, right? There's only going to be a few profiles. It's not going to be an infinite number, right? So I'm only actively trading for about 5 hours a day, right? The rest of my day, I go about my business, handle my other projects. I work along with my family, right? Have one-on-one sessions with students, record YouTube videos for you guys, hit the gym, right? But I'm only on the charts for about 5 hours a day. That's pretty much it. Now, time is probably more important than liquidity. We can do without liquidity within our strategy and change up some things, right? But without time, okay, without proper timing, you're going to be lost within the markets. You're going to be looking at, like, okay, I get a lot of questions as well, like, Mac, why don't you have, the H1 time frame anymore, right? You only have the daily, the weekly, the monthly, and the M15. It's because our day trading strategy, okay, we only need to look at the daily once, and then we're on the M15. That's it. We look at the charts every 15 minutes, pretty much. Right? So, how many 15-minute candles are within 1 hour? How many 15-minute candles are in 1 hour? All right. We had someone on our other live answer it. Perfect. 4. Right? So what's 4 times 5? 20. With our trading strategy, you only have to look at the markets 20 times and look at 20 candles. That's all you need. That's really all you need. It's the easiest. I've been trading for about 5 years now, almost 5 years. Easiest strategy I've ever come across. Right? I always thought institutions, like Wells Fargo and Bank of America and Chase Bank, I always thought they would have like intricate strategies with all these crazy numbers and indicators, and nah. It's very, very simple. Very, very simple. So we got another question. Do I trade other people's money? No, I don't trade other people's money right now because I'm actually training 4 of my I train 4 specific analysts to trade my capital. So I allocate certain amounts of capital to those individuals, and right now most of my energy goes into like managing their accounts and stuff like that. But eventually we will get into PAM accounts where I will be managing. Like you guys will be able to connect your accounts to my index trading account, and you guys will be able to take advantage of my trades. But right now I'm completely comfortable trading my money. There's plenty of it. And with the consistent returns, like 2.26%, like to my trading account is like that's a good day. That's a really good day. Like if you do this every day for a month, like you're good. Even if you do it 5 times a month, right? Like you're good. So I look for quantity. No indicators, no moving averages. No, I don't use it. The only indicator I will use is volume. Okay? But I do like to understand the pressure within candles. So I will use volume from time to time. This indicator right here just shows me inside bars. So it's not really something that I use all too much because I can spot that with my eyes. But I do have it up here because some of my students use it. Well, a lot of my students use it. So, but I do use volume, especially on the daily time frame. But outside of that, nah, man, I don't use any indicators. You don't need it. I'm telling you, liquidity and time, that's it. Literally. These are the only two. Well, there is a third thing that I pay attention to. but that's taught within my course, so I don't want to talk about it publicly. All right, but there is a third thing. But outside of that third thing, time and liquidity. That's it. And you got to keep in mind, like, the algorithm, like, price is moved by an algorithm, right? So that algorithm produces footprints. Okay? And we essentially just take advantage of those footprints. Can I go over the re-entry on Friday? Yeah, I can go over the re-entry on Friday. Very straightforward. So we had a PM session re-entry opportunity here. Okay, M15 confluence was met when we had this candle close bullish here. All right, if we go to the M5, now I did not take this as a re-entry opportunity because I was already in the trade from here, right? So when price gave a re-entry, I was already floating about 7% return on investment. So there was no reason for me to look for re-entries here. Now we had one opportunity here. All right, to re-enter the market. All right, if we're looking for 2R, that wouldn't have been hit just yet. Now this is so close to the market closing. All right, you would have to debate whether or not you really want to take this trade. Usually on Fridays I don't trade the PM session, but I'll trade the AM session. All right, let's go to the M2 time frame. All right, no entry on the M5. At least not up here within this area. We did have an M5 entry down here, however. All right, we also have an M2 entry down here. Pretty straightforward. So this will be a decent invalidation area for the minimum threshold between buys and sells. That wouldn't be bad. No entry on the M2, so let's go to the M1. All right, let's see. M1, beautiful entry here. You would have probably had to take this manual after price gave you that bearish candlestick body closure. So right now you would be floating on this trade here. You'd be floating about 10% return on investment based on where current price is right now. Right, stop loss would have been very, very tight on this trade. Very, very tight. But yeah, all of your confluences play out here and does not play out before. And that's what I love about my strategy. Our strategy here at Mac Trading Academy. Right? You don't have to guess. You don't have to question. You wait for the confluences. You wait for the strategy to play out. You have a checklist, 1, 2, 3, right? And then you're good to go. You take the trade. Footprints meaning patterns. Yes. Yes. It leaves specific patterns in the market, but it's not like a drawing pattern, right? So it's not like a bullish flag or whatever, right? Or head and shoulders, right? It's not like that, right? When I say pattern, what I mean is X happens, then Y happens, then Z happens. A happens, then B happens, then C happens. 1 happens, 2 happens, 3 happens. This is what I mean when I say pattern, okay? So this is the algorithmic pattern here, right? This may be, profitable for some people, right? Market patterns, but this is the pattern that we trade here, which is why we're so consistent. We're not looking like I would rather have consistent 3 to 5% return days, right, than to have inconsistent, crazy returns. I'd rather have consistent, small returns. Right? So yeah, so that's the re-entry opportunity that took place on Friday on SPX. Very, very small stop. Like I said, you would probably have to take this position manually. I trade on MetaTrader 5 platform and Trade-of-8. If you guys ever see me trade on TradingView, right? It's through Trade-of-8. I just connect my account, put in my credentials, log in, and it's very, very straightforward. It is a small monthly fee to connect. I think it's like $25 or something like that. But yeah, that's how I do it. Have I tried any of the other brokers? Not really. I mean, I've tried Owanda. That was the first time I ever put over $1,000 into a broker. Lost it all. Did not understand position sizing when I first started on Owanda. I've never really tried any of these. I've heard good things about TradeStation. I've never tried it. But yeah, I've never tried any of the other ones. I've just tried Trade-of-8. Am I looking to get into any US 30 positions? Not right now. Not necessarily. No. It was a beautiful sell position that took place here on Friday. However, I was not in it. I was in an AM session SPX sell, but it never set up on US 30. It's all good. So yeah. All right, but if you guys don't have any other questions, it's 12:36 my time. So if you guys don't have any other questions, I'm gonna go ahead and get some rest and prep for New York session tomorrow. Let's see. So someone asked, do I have any numbers? Like, you mean my trading account? Is that what you're asking for? If you want to see stuff like that, like, follow me on Instagram, because I post my trades pretty much every day. But yeah, I do have. If you guys want to see my my weekly stats from last year, I can definitely post those from my broker. Let me know if that's what you guys want to see. I hate to leave the chat, but I gotta go. I'll catch up for us later. Thanks, bro. Yeah, man, no doubt. Peace out, man. I'll catch you. All right, let's see. Let me see if I can find it again. Where's that screenshot? Okay. found it for you guys. So here's my performance weekly trading the index market only last year. Where'd it go? I literally just had it. All right, let me see. Oh yeah, there it is. Okay. I see it on my desktop, but for some reason it's not actually popping up on. All right, there we go. All right, so this is my, here it is here. I don't know what's going on. Okay, here it is. All right, so this was my performance by week last year. Now this loss here that you guys are seeing, this I forgot to set a stop loss here. And I came back after a news event expecting my target to have been hit, but instead I saw the trade opened and it was just continuing to decline. So that was just an accident here. But yeah, that's my performance last year. I'm expecting to outperform. Well, I'm already on track to outperform this. Definitely, definitely outperforming this. But last year was a pretty good run using this strategy, and this year has been crazy. So with that being said, guys, I'll catch you guys on the next one. Thank you for everyone tuning in. Much love and peace out.